Let's just take a second and start with a moment of silence. I want you to clear your mind of the noise, the bills, all that baseline financial anxiety that we literally all carry around. Welcome to Carter Wealth. Today, we're going on a bit of a journey. Think of this as a cinematic, data-driven explainer of your entire financial life. We are going to climb a very specific ladder together, rung by rung, so we can see exactly what life looks like, and honestly, more importantly, what it feels like at every single level of net worth. All right, let's dive into this. $192,700. Now, according to the Federal Reserve Survey of Consumer Finances, that weight there is the median American net worth. It's the number perfectly in the middle. Half the country has more, half has less. But what's really fascinating here is what this number doesn't tell you. The average American net worth, well, that's actually over $1 million. And that massive, massive gap tells a pretty stark story about two completely different economic realities coexisting in the exact same country. So let me ask you directly, do you actually know your net worth? Like, if someone asked you right now, could you state your number with total confidence? If you're shaking your head right now, trust me, you are absolutely not alone. Most people can't answer this. And it's not because they're bad with money, but because nobody ever showed them the roadmap, you know? Nobody ever mapped out what to actually expect at 25, 35, or 45. Well, consider this explainer your official roadmap. Before we really start our climb, we gotta set the ground rules. Net worth is simply everything you own minus everything you owe, period. Notice what's totally missing from that equation: your income. Because your bi-weekly paycheck is just cash flow. Net worth isn't about what flows in, it's about subtracting their total debts from their total assets to see what actually stays. Building assets and minimizing liabilities, that's the whole shebang. That is the entire game. Okay, here we are at the absolute bottom of the ladder. Level 1, negative net worth. This is the starting line for millions of Americans. You run that simple equation we just talked about, and the number comes out below zero. You are officially in the hole. Your liabilities completely outweigh your assets. Emotionally, it feels like running on a treadmill that just keeps speeding up, where every single exhausted step forward just barely prevents you from sliding further back. Now, you might be thinking this is just a tiny, isolated group of people, right? Well, the Federal Reserve data reveals that roughly 11% of American families, that is about 14 million households, are currently living in this negative reality. And for adults under 35, that percentage skyrockets. Why? Because on literally day one of their adult life, before they've earned a single dime in their career, they're already starting deep in the hole. And man, here is the brutal math keeping them trapped there. We're talking an average credit card balance of nearly $8,000 at a staggering 22.3% interest rate. At that rate, the math is actively working against you every single month. You will literally pay back way more than you borrowed just in interest alone. So the absolute priority at this level, it isn't to start some complex investment portfolio. It's to stop the bleeding, halt the debt, and scrape together your first $1,000 just to put a wall between you and the next crisis. Which brings us to our next run, level 2, $0 to $5,000. Making it above zero, that is a massive, massive psychological milestone. You've officially climbed out of the pit. But I have to warn you, in this survival zone, your stability remains incredibly fragile. $600. According to Empower's research, this is the median emergency savings for Americans right now. Think about that. Half the country has less than this set aside. $600 will even cover a single major car repair, or heaven forbid, a visit to the emergency room. At this level, yes, you are technically surviving, but you are completely unprotected from life's inevitable financial shocks. And this razor-thin margin is exactly why emergencies hit so devastatingly hard. 37% of Americans would literally have to borrow money, swipe a high-interest credit card, or sell something they own just to cover a mere $400 unexpected expense. One flat tire, one minor medical bill, and boom, they are pushed right back down to level 1. This is exactly why building a fully funded emergency fund absolutely has to precede investing. It's your financial armor. Now, that solid foundation builds directly into level 3, $5,000 to $25,000. A foundation stage. You are finally out of pure survival mode. You've got some real solid ground under your feet. And honestly, the most exciting shift here is that you can finally start interacting with one of the most powerful forces in the universe: compound interest. But you gotta see the devastating cost of waiting to start. Look at this. If you start investing just $300 a month at age 25, you are looking at nearly $800,000 by age 65. But if you wait just 10 years until age 35 to make that exact same monthly investment, you end up with only $378,000. A 10-year delay literally costs you over $400,000 in final wealth. Time is absolutely your greatest asset here. As those early investments start to grow, we cross into level 4, $25,000 to $100,000. This right here is the turning point. Crossing into this level creates a profound psychological shift in your mind. Before this, money was just a pure survival mechanism. But here, money transforms. It actually becomes a tool of empowerment that protects your choices. But let's compare two entirely different realities to show you what I mean. Person A has zero savings and is basically forced to accept the very first job offer they get, even if it's terrible. Meanwhile, Person B has a $50,000 cushion in the bank. Person B can say no. They can wait for the right offer, they can comfortably negotiate a higher salary, and they can take calculated career risks. A financial cushion completely changes your relationship with risk and gives you the ultimate power, the power to just walk away. There's another massive shift that happens around this level too. The stark, undeniable divide between homeowners and renters. Home equity often in the way starts to build in level 4, and it acts as one of the single biggest wealth building forces for the middle class. It essentially acts like a giant forced savings account that appreciates over time, creating this staggering 35-to-1 wealth gap between those who own and those who rent. Once you break through that magical 6-figure barrier, you enter level 5, the momentum phase. Financial researchers call this the psychological breakthrough of 6 figures. This is where compound interest stops being some theoretical textbook concepts you read about, and it becomes a tangible, real-world reality that you can actually see working inside your own investment accounts day after day. But I gotta warn you, danger definitely lurks here. $1.277 trillion. That is the record total of US consumer credit card debt. At level 5, you'll really start noticing a huge gap between your disciplined saving and the flashy, expensive lifestyle of people around you. Then your cars, the luxury vacations. But keep this trillion-dollar number in your head. A huge portion of that appearance of wealth is entirely fueled by crippling consumer debt. Your absolute biggest job here is to fight lifestyle creep and just keep saving. Stay disciplined, avoid the flash, and you arrive at level 6, the compounding machine. Statistically speaking, reaching this run on the ladder firmly places your household in the top 20% of American wealth. You aren't just saving money anymore, you have literally built a machine that runs entirely on its own. And the true power of this machine is all in the math. Assuming a historical 7% return, a $250,000 portfolio is just passively generating over $17,000 a year. Hit $500,000 and your portfolio is just handing you $35,000 a year. That is almost $3,000 every single month generated passively without you having to work a single extra hour at your job. Your money is officially doing the heavy lifting. And that massive momentum carries you right into level 7, the summit approach. At this stage, that baseline hum of financial anxiety that plagued you in the lower levels, it finally goes quiet. You are getting so close to the peak. And most importantly, retirement stops being this vague, someday maybe concept, and it turns into a very specific, actionable date on your actual calendar. But pay close attention here because there's a vital distinction that you have to make for retirement. Total net worth, which includes your home equity, well, that looks fantastic on paper, but only your investable net worth actually matters when you reach the summit. Think about it. Your home equity won't buy your weekly groceries. Only your liquid investable assets are going to generate the actual passive cash flow you need to fund your life when you stop working. And finally, welcome to level 8, the other side of the ladder. You have officially crossed the $1 million threshold. And hey, if you think this is just some ultra-exclusive cloud of lottery winners and trust fund kids, think again. According to Empower Research, over 1,000 regular Americans cross this exact threshold every single day. You are standing at the summit, looking out at a completely different financial landscape. And honestly, this reality completely shatters our biggest cultural myth about wealth. Get this, 79% of millionaires received absolutely zero inheritance. Nothing. They are entirely self-made. We're not just talking about hedge fund managers or tech CEOs here. We're talking about everyday professionals, teachers, accountants, engineers, who relied on decades of consistent, boring saving and discipline. They didn't hit the jackpot, they just won the math game. Which leads us perfectly to this profound truth. The real secret to reaching the summit isn't about hyper-focusing on your final balance. It's about duration. It's about skipping those unnecessary upgrades, holding your position steady during those terrifying market corrections, and having the sheer, stubborn willingness to stay in the game long enough for the math of compounding to actually do its job. So let me leave you with a bit of a challenge today. Where exactly are you on this ladder right now? Follow these 3 incredibly simple steps. Step 1, list everything you own. Step 2, list everything you owe. Step 3, subtract. Find your exact starting point. Because brutal honesty and awareness is where every single successful financial journey begins. Once you have your number, the only question left to answer is, which level of the ladder are you moving toward tomorrow? Keep climbing, and we will see you in the next explainer right here on Carter Wealth.